Hi, I'm Joe Faracco, Director of Portfolio Solutions Management at Sun Life Global Investments. I'm here today with Chhad Aul, Portfolio Manager of the Sun Life Global Tactical Yield Private Pool. Chhad, with the recent spike in volatility, can you share your view on what we're seeing in the markets?
For a little over a month now, markets have been gripped by the spread of the coronavirus, upgraded now to a global pandemic status, and more importantly, the decision by governments around the world to lock down vast segments of their economies to help contain the spread of this virus. The market is really focused on this unprecedented grinding to a halt of the world economy with simultaneous shocks to both demand and supply. And this has led to a brisk sell-off in risky assets. Many equity markets have lost 30 to 40% of their value in just over a month, and this represents the fastest drop into bear market territory ever experienced. Similarly, credit spreads have blown out to levels unseen since the days of the global financial crisis, an issue compounded by an oil price war between Saudi Arabia and Russia, which has led to plunging crude prices and fears of bankruptcy in the energy sector. Now, safe havens, such as global bonds, have seen a crush of buyers. Earlier this month, we saw yields on 10-year treasuries hitting a remarkable low of only 35 basis points before normalizing somewhat. Now, markets always represent a struggle between fear and greed. In situations such as this, fear dominates, particularly in a situation as unique as the one that we are entering today. This extreme fear, however, also creates opportunities for long-term investors. Amongst the positives we are seeing are extraordinary policy responses to limit this economic damage of the containment policies. Now, central banks have been very quick to respond. They've responded with rate cuts and exceptional measures, particularly from the Federal Reserve in the US. So the Fed has dusted off their playbook from the financial crisis, where they were able to prevent a liquidity crisis on Wall Street from turning into a solvency crisis. This time around, they're expanding that playbook to support Main Street as well. So they're pledging, in this case, to buy not just vast amounts of government debt, but corporate and municipal bonds as well. On the fiscal side, while somewhat slower to act, we do believe that governments around the world will step to the plate with massive stimulus measures designed to support individuals facing job losses and businesses seeing collapsing demand. Really, the goal with these fiscal measures is to allow individuals and businesses to bridge this sharp economic downturn until those containment policies can begin to be reversed.
Thanks, Chhad. Given your views on the market, how have you positioned the Sun Life Global Tactical Yield Private Pool?
That's a great question. It is important when fear grips the market, as we've talked about, that we stick to our investment process and maintain a long-term view towards managing our portfolios. In the Sun Life Global Tactical Yield Private Pool, this means utilizing active management, both from the bottom up and the top down, to position our portfolios for the other side of this crisis. Understanding that this location provides a rare opportunity to take advantage of markets' fears by maintaining our discipline. From the bottom up, the active managers we employ in this pool for picking stocks and picking bonds in their respective asset classes have the opportunity to identify that proverbial baby being thrown out with the bathwater and acquire attractive investments at fire sale prices. From the top down, we have been active in our tactical asset allocation as well. So as bond yields cratered earlier in the month, we reduced our bond allocation to its lower bound of 30% in favor of cash, as we saw the haven bid for quality bonds as being excessively prone to a reversal, in fact. Within that bond allocation, however, we've maximized our allocation to the opportunistic fixed income pool, as we see the nimble alternative strategies being able to take advantage of the current environment. At the same time, we have an eye on opportunistically deploying our cash balance towards global equities at moments where we see that extreme fear really gripping the markets, with a view that these may provide great entry points as we look out beyond the current crisis and the eventual recovery to come.